Welcome to our guests, Mr. Swarup and Harsh. It's good to have you with us. You know, while we're talking about this entire pitch, this entire dream of insurance for everyone by 2047, Mr. Swarup, first I'd like to know from you, how far have we come on that dream?
Oh, I think if I were to just talk of simple penetration levels, we always measure it versus the GDP, and we always say that give and take whichever data you basically say is around 3.7 to 4%. I would just say is only one piece is this, that we are still in the scratch of the surface. Today, insurance is predominantly advisory-led. It is either attachment or advisory, but insurance has not taken the shape what it potentially can actually take. And if I would look at the overall macros, I think there's a huge amount of change what we're seeing in the consumer side of it. The middle class incomes are expanding, lifestyles are improving. The rural incomes are, truly, getting into more consumption-led. They are getting into a more of a specific level of expenses. So if we were to just cut all that together, add what amazing thing IID is doing through this, Bima Trinity, I genuinely believe that, we're going to have a far more better patch or a purple patch of insurance as we move further. Today, the banks actually contribute almost 60+% of the insurance business, and the rest is done between the agents, etc. So if we were to club all of it together, I think the opportunity is huge. We do at Access Max Life a specific research, what we call as the India Protection Index, and you'll be fairly interested to know that over 70% of the urban consumers are underinsured. On the other side of it, we do another research, what we call as India Retirement Index. And that data points actually tell us that only 1/3 of us, probably even in this room, actually have planned for a retirement. And that basically tells that, that's the level of scale, size, and opportunity which is available for us on the insurance side of it. So 2047, I think a long way to go.
It begs the question, because it's not now that we're talking about insurance. We've been talking about it for a long time. The opportunity has been there for a long time. So why are we still just scratching the surface? Harsh, you deal with a lot of people and you give them advice, and he said the role of the advisory is an important one. What are the roadblocks, as it were, why we're still scratching the surface?
Thank you, Vikram. Very good evening to all of you. Thank you, NDTV, for having us here. Vikram, what Swarup said is actually, very meaningful, saying that we are still at the scratch of the surface. The protection index that we spoke about, most of us in this room may not be adequately insured. I can say that with conviction. Now, what is adequate insurance? That's a matter of discussion, and that's a matter of consultation. Now, what actually is the reason why we haven't been able to, approach this topic with so much of conviction? Now, there are 4 stakeholders in this entire industry. Okay, the first, of course, the manufacturers. Then there are intermediaries. Those are the brokers, they are agents, distributors, as you may call them. There are consumers, the end consumer, and then you have a regulator. Now, if you see the entire intent of the industry, you'll find the consumer at the most vulnerable spot. Okay, this industry, for whatever reasons, as Alex mentioned, I have been talking this over a decade now to say that insurance is a first step of financial planning. While we talk about wealth creation over long term, an individual may go in very successfully building a nice portfolio for 20 years, and there is one hospitalization that actually takes away everything, right? So you're one hospitalization away from bankruptcy. That's the situation. Now, how do you protect and preserve wealth? It is through the mechanism of insurance. Now, despite being such an important topic and such an important tool of financial planning, why are we still not being able to move beyond 3.7% of GDP coverage, right? So the idea is that the ecosystem has to be favoring the end consumer. Now, I'll take this parlance from SEBI. Okay, now the smallest of investors, the retail of investors putting in 500 rupees a month, has some trust in the ecosystem to say that if anything goes wrong, there is a regulator I can write to, and then heavy action will be taken against the intermediary if they are not being fair to me.
Right.
Now, that confidence apparently does not come with a policyholder in an insurance industry. Now, if the ecosystem is such that every person buying an insurance believes that he'll be rightly and correctly treated, the penetration will go up. Now, there are n number of instances in 3 decades of my practice. I can enumerate and say that how blatantly an investor's or a policyholder's rights have been violated.
So, Mr. Swarup, in that sense, this ecosystem and the role of the regulator is an important piece. Like you said, now we have the Bima Trinity as well. We're talking about penetration much deeper than we ever had. And the opportunity for the industry is also very, very obvious. We've spoken about the numbers as well. But trust remains the core element of this entire push towards getting everyone on board, thinking that your savings are important, your insurance is even more important before you do anything else. Why haven't we reached that stage, according to you, from an industry perspective? Because that's where the opportunity is.
So I'll just, if you do a quick research in this particular room, right? And if everyone, asks their second neighbor over here, I think the one common question which is missing in our Indian mentality or the Indian houses is, your spouse will never ask you how much insurance you have. Insurance is never a household conversation within the families, A. And number two, even in your social gigs as well. We'll definitely speak about how well a specific fund is doing, how well is the present flavor of SIFs are doing, or what potentially those SIFs can give. But I think that's one side of it, right? That insurance continues to be still a push-based product. And when you talk of a push-based product, then the second question is, where is the trust in a push-based product? And who brings in the trust? It's easy for us to say that the distributors are not giving the perfect advice to a client. But if you were to just extrapolate what has happened on the mutual fund side of it, right? I think the convenience, the transparency has created a scale. What's missing in insurance has been that the convenience and the transparency always has been at the level of advisory. And it is an advisor, whether it's a banker, whether it's your own personal agent, or whether it's your web aggregator, who's making the big difference. So if I were to bring all of it together, I think the most biggest pivot today is, and I'll just give you one small statistics, right? India has around 27 lakh agents. Okay, that's point number one. You have, apart from these 27 lakh agents, you have 1.5 lakh bank branches which advise on insurance. Plus you have 500 plus brokers. Plus there is around 1.25 lakh mutual fund distributors who are advising on insurance. Now, across this entire ecosystem, if there is one particular aspect which probably insurance has to continue to spotlight on, is today we are buying insurance which could be, as my colleague said, how adequate is that? Today we are talking of GDP on the insurance, but we are not talking of the resilience of an insurance. Today, how much of an insurance claim would be able to replace the value of a household, in case something happens to the household or something happens to the business? I think these are the factors, I believe, which probably has created a trust deficit on insurance.
So we're insuring, you're saying, but we're not insuring enough.
We are not insuring.
That's the grouse right now from the industry standpoint. But isn't technology helping? Isn't all the innovation when it comes to products, when it comes to how, even on a WhatsApp, you're able to have that kind of communication going? Why is that not happening?
So I think, you basically look at three aspects of it, right? In the insurance journey, if you were to divide that, one is the discovery of a product, whether it suits you or not, whether it's the right kind of a chassis for you, etc. Second is the purchase, and third is the service part of it. When you compare an insurance to a mutual fund, the insurance are still fragmented across three different levels. You have the discovery separate, you have the purchase journey separate, and you have the service separate. Presently, mutual funds have done extremely importantly and amazingly is this, that they have driven on singularity of the journey. I think what insurance is trying to now through this Bima Trinity is trying to bring across all of this together, right? And that makes a huge difference. Today,
has it? So far?
So far, it has made a huge difference, at least if you were to look at in the space of the banking, right? Today, if you were to look at large banks, their insurance penetration would be upwards of 15-16% of their portfolio, which is exceedingly differently than what you see in the overall India as a as a GDP. So I think we are there where technology is enabling the onboarding journeys. The most important part is today, what is technology doing is, it is also allowing us, in simple words, address the most important aspect of insurance, which probably, sometimes we, miss, is technology is allowing us to actually detect frauds. Technology is allowing us to read those, large medical reports of yours much more faster. I've been in insurance for the last 2 decades. I've seen that today, insurance policies are issued in minutes on the life insurance side, right? Which earlier used to take 10 days, 12 days, 14 days. So we are there, and we genuinely are creating in the right steps across the technology.
So how has the advisory business changed because of the technology coming in? Because, I can access all of this on the touch of a button, like he's pointing out. But he's also saying that advisory is about the trust, and that is the element, the human element, before you decide how much insurance and what do you do exactly with the kind of products that are available out there. So how has that changed your advisory business?
So, Vikram, in fact, advice towards creating an insurance portfolio is far more important and complicated than it is to create an investment portfolio, quite honestly. We are on both sides of the fence. So if I were to create an insurance portfolio for my client, it takes me far more time than what it takes me to create an investment portfolio. So it is a very important factor, and I'm re-emphasizing this to all people even in this room. Please look into your insurance portfolios and you will realize that there is a gap that needs to be filled. Now, coming to the trust and that hierarchy, well, very respectfully, slightly disagreeing with you on this, it's not the only burden on the intermediaries to ensure what kind of advice has been given. Honestly, I've been in this field for almost 3 decades now. The kind of push that comes from the manufacturers, now we spoke about banks having a 15% exposure. You know how it is functioning in the banks. It's a known fact to everybody that bankers who are being assigned to sell insurance in the banks themselves are not happy. A 60-year walking in has been given he wants to do a fixed deposit, but he's given a ULIP. And you talk to anybody in the banking system, they would not by choice want to sell insurance. They've done a banking course, come over there trying to make a career in banks, in the banking industry, and they've been pushed to selling insurance. It's a known fact. Now, nobody wants to speak about it. Nobody wants to accept it. Very, very respectfully, Swarup sir, I've sat with my clients. So there's an incident where a client of mine took me to his bank, said that I'm taking a loan, and the banker is forcing me to buy insurance. The only thing that I want you to do is help me buy the least worst product. So that's his mandate. I go over there and I'm talking to him. The bank manager is telling me, and there's an insurance representative sitting next to him.
So in this kind of push towards targets and things like that, in every industry, wherever there are products to sell, you're going to have that. But in this case, where you're insuring lives, does the strategy need to be any different? How would you revisit the kind of approach that we've taken to pushing the insurance agenda in the country?
I think, I would just say is this, that, while we all anchor around advisory-based sales as the right pivot, I think there are 2 aspects of it, what we need to, clearly identify on. Number one, are you actually reaching out to the customer set or to the customer segment with the right solution? And that's my first aspect of it. Again, interesting data point is this, that, we as a country love savings-oriented insurance more than the protection-oriented insurance, right? And on the other side of it, again, our study basically shows, which is the India Protection Index, it shows that while we Indians believe that, we are fairly price-sensitive, right? But the price-sensitive is not the key aspect for a customer buying an insurance company or a specific insurance product. It is first the transparency, and second is the trust. So if I were to bring these 2 together, my only solve I would just say is this, that, first is the level of segmentation, what you do at a customer level. As my other colleague said, yes, bankers do have their reputation, but on the other side, they also do have a right reputation too, in terms of advising a customer products by the customer segments, whether it is on the ULIP side of it, whether it's on the protection side of it. But one key distinction which I would just continue to say is this, that I think the last 5 years has changed the entire era of how insurance is looked at or how it is bought at. I think the COVID clearly told to the customer that insurance first should be bought, okay, with the right adequate value. That's number one. The second, the advisor or the banker or whomsoever is the intermediary clearly has realized that he has to give a right fitment product to the customer. Because everyone knows that insurance is the critical one when you need the most. And at that point of time, a wrong fitment of the product genuinely can create a huge amount of a mistrust or a displacement. So to address to that, yes, I would just only say one point is this, that I think segmentation, and I'll just say one point of the PMJJY has clearly created one particular segment which has for the first time heard that there is an insurance cover. Now the next value migration of them would be, would they want to buy further a protection or they want to move into a savings-oriented product?
So this approach, savings, investment, when it comes to insurance, that's something that you've held a steady line on. I want to understand from you, when pricing comes in, when premium is considered in this entire pitch, in this entire equation, how has that changed the entire push towards getting more people on board to think of insurance as a product that they need to buy into to secure their lives?
So honestly, Vikram, when you look at pure coverage, the pure protection plans, the first thing to begin with is do not mix your investments and insurance. Now this is for a for a person who's well versed with finances, who can understand his, you can manage his portfolio on his own, etc. Okay, there could be one area for one set of investors who would want to mix both, though it is ideal not to do that. Okay, now come to the premiumization, the premium that we're talking about. Well, if you equate the cost that you pay with the benefits that you may have in case of any eventuality, there is no comparison. Okay, now if somebody, a family's entire protection plan, the insurance portfolio can be designed with as little as probably 5,000 to 6,000 rupees a month. So there could be a family of 4 people, a husband, wife, and 2 children. We could design an entire insurance portfolio, pure protection plans, which could be say 5,000 to 6,000 a month. Now, if somebody says that I'm paying 50,000, 60,000 rupees a year, what if nothing happens to me? Then all this money is gone down the drain. So I think this is the best case scenario. When you buy insurance and something happens to you, you say, thank God, right? You had insurance. You buy insurance and nothing happens to you, you say, thank God, nothing happened to me. Now, if you start equating that my money has gone waste, I think that's not the right approach. I mean, if you look at it in a modern, in a metro kind of a setup, 5,000 to 10,000 rupees you spend probably on a 1 weekend outing. Now, can you not spend that kind of money to protect yourself properly? Now coming to how the government has intervened and reduced the cost of pure protection plans by 18%, I think that's something that the government is also trying to communicate. With regards to the policies that they have, the 2 lakh Pradhan Mantri Jeevan Jyoti Bima Yojana and the Jeevan Suraksha Yojana, the life insurance of 2 lakhs at 436 rupees, the 2 lakh cover for 20 rupees per annum. I think this is trying to move towards and at least securing all families across India, irrespective of their social status, to say that, okay, at least we have 2 lakhs worth of life and accidental cover. Right. So I think it's for us to understand the importance of this product. Do not equate the benefits with the cost that you're paying, because eventually the cost is only negligible part. One point I'd like to add here, just from a thought process. Say hypothetically you're paying 10,000 rupees as annual premium for a health cover of 10 lakhs, for instance. You're paying 10,000 rupees. For 30 years, you continuously keep paying this. And so what have you paid eventually out of your pocket? You paid about 3 lakh of rupees. Do you believe that in the next 30 years, I wouldn't have any hospitalization worth at least 10 lakhs? So if you at all think that it is going to go waste, it's the best case scenario. But even if one instance, even like a COVID kind of a scenario, or if you've just got fever, malaria or a dengue and you're hospitalized, the average cost is about 1.5 lakhs. Right? So never think of insurance premium as something which is burdensome to the family budget. In fact, I have gone and said this, that even if you can't invest, that is still the okay. Best reason for you to buy insurance.
Go for the protection. Yeah. Go for the protection. You need to insure yourself.
Just like to add.
One sec. Because we're running out of time. Sorry, okay. Sir.
So just to add to him, and I think he said a very, very pertinent point. I think it's just that, there are three value chains across this. First, each one of us, have to look at insurance till the age of 35. Insurance is a tool of wealth preservation. The second is, from 35 to 50 is where you're creating a portfolio. You got to ask yourself, that how insurance is actually creating a tool of wealth consolidation. And beyond 50, 55, you got to clearly look at insurance as a wealth transmission as a tool. And I think these three life cycles potentially create a great value for a customer.
Well, so we have covered some ground. Policy is helping. Of course, there is the entire push towards making insurance that much more economical and that much more bearable for people who live in the smaller towns and villages. So the penetration effort is clearly on. But at this stage, like you said, we're still scratching the surface. Perhaps we need the regulator to come in that much more strongly, and perhaps as a strategy towards getting consumers on board, getting users on board. That strategy perhaps needs a rethink as well, is my larger takeaway. But thank you, Mr. Swarup and Harsh, for joining us on this discussion. It's great having you with us.
Thank you very much.
Thank you.
I'm very happy
Thanks so much.
Thank you.
Thank you.